Good afternoon. My name is Rebecca Spence, press officer for the Bank of Canada, and I will be moderating this press conference. Governor Macklem will be pleased to take questions for about 20 minutes. Before asking your question, please state your name and affiliation. We also have some journalists participating via teleconference today, so we'll do one question in the room first and then turn to the phone lines to try to make sure everyone gets a chance to ask their questions. The Governor will be happy to answer questions in both official languages. Avant de poser une question, prière de vous identifier, je vous demanderai également d'utiliser le micro sans fil. Libre à vous de poser vos questions dans la langue officielle de votre choix. So we'll start with Nisha Patel.
Nisha Patel, CBC News. Thanks, Governor. There have been a lot of commentary about companies taking advantage of inflation to boost profit margins, including from ECB President today. How concerned are you about profit-led inflation and its effect on getting back to the 2% target?
One of the things, look, there's no question what we observed, particularly last summer when inflation was 8%, what we saw was that companies were raising prices more frequently, and they were raising them by more than usual. We've started to see some normalization in corporate pricing behavior. So that is, it's starting to get back to normal. And when we go out and we talk to businesses, what they tell us is that they expect that they won't be raising prices as frequently and by as much. And if you look at the actual distribution of price changes, it has shifted back towards normal, but it's still not normal. So that is something, and I spent quite a bit of time in my remarks today on that. That is something we're watching very closely. We do need to see corporate pricing behavior get back to normal. In other words, like what it was like before the pandemic to get inflation back to 2%. What I will say is that there are a range of issues here. There may be competition issues. The Competition Bureau in Canada is looking at competition particularly in the grocery sector. From our perspective, it's really about bringing demand and supply into balance in the economy. If a company feels like they can't keep up with demand, they're not worried about losing customers. So they feel free to raise their prices. But when you get inflation down and you get the economy into balance, then companies become more cautious about raising their prices because they're worried about losing customers. That's where we have to get back to. We're on our way. Inflation's coming down, but there is some more work to do.
We'll go now to David George Kosh.
Good afternoon, Governor. David George Kosh, BNN Bloomberg. Thanks for taking our questions. I just wanted to expand a little bit about the comments that you made about the international banking stressors that you're identifying. Today, we saw some potential early signs of instability given TD's decision to not merge with First Horizon Bank and how that led off to a steep sell-off in regional banks in the U.S. This could be a potential unraveling situation in the U.S. banking sector. And I was wondering if you could just comment about your thoughts about how that could potentially impact that severe global recession, as well as those other risks that you're identifying could lay on to the inflation target that the bank has set.
Well, as you've just highlighted, yes, in the last few days we've seen some renewed turbulence in the U.S. regional banking sector. I'll say a couple of things here. One is, from the start, the U.S. authorities have acted forcefully. They've addressed these failing institutions, they've protected depositors, and they've kept credit flowing, particularly through Federal Reserve facilities. And when you combine that with the post-global financial crisis reforms, the post-08-09 reforms that added additional capital, liquidity buffers, reduced leverage, all those things together have limited contagion. But clearly what you're seeing is that banks that are vulnerable are coming under pressure when sentiment sours. Coming back to Canada, the effects, and certainly in the U.S. you can see that has had some, that has caused some tightening of credit conditions, and I won't speak for the Fed, but they've been very public that they are trying to gauge how much extra tightening that is creating as they take their own monetary policy decisions. Here in Canada, so far, the effects, the spillovers have been very muted, so it hasn't really been a factor in Canada. But, as I outlined today against the background of this turbulence, a few things. One is, it's not price stability or financial stability. We need both. And in fact, they reinforce each other. But there also is some interaction. So if we were to get a much more pronounced spillover, and as a result there was a much bigger tightening of financial conditions than we intended through our interest rate increases, and particularly and importantly, if that was to persist, if it was to be persistent, that is something that we would need to take into account in our own settings of monetary policy. Otherwise, we would risk over tightening.
Thanks. We'll go to you, David Parkinson.
Dave Parkinson at the Globe and Mail. Oops, there goes my question. There was a question in the room today about when you might start having the conversation about rate cuts, and I know you've said many times, you've said again today that conversation hasn't started, that it is too soon. I wonder if you might be able to frame, though, you did say at some point and before we actually got to target that conversation would start. Does that conversation does it begin, if you can give us sort of a ballpark range when that starts to come up? Do we need to be south of 3% before that conversation starts in the room with the Governing Council?
Yeah. Look, Dave, I am going to resist trying to put this on a calendar or try to put this on a timeline. What we have been clear about is there are a number of things we're really watching closely, and we are committed to getting inflation all the way back to 2. And those things that we're watching closely, getting back to the first question, corporate pricing behavior, we're looking at the tightness in the labor market and wage growth very closely. Wage growth, the labor market needs to rebalance. It's still very tight. Wage growth needs to moderate to get inflation back to 2%. And then thirdly, inflation expectations. The good news is that by acting forcefully, we have kept long-run inflation expectations very, very well anchored, and so that as global supply chains have improved and global goods prices, inflation has come down, that has fed through nicely into Canada and pulled inflation down quite quickly. But we are conscious that getting from 3 to 2 could be more difficult, and there's certainly more uncertainty about that part of our forecast. So we've been very clear about those are the things we're watching. And what I can say is, we're very clear, if those things don't happen, inflation won't come all the way back to 2, and we are prepared to raise interest rates further to get there. When those things are clearly happening and we feel that all the pieces are coming into place to get back to 2, well then yes, then at that point we can start thinking about is it time to start easing off a bit on the tightening? But right now, we've been very clear, we're pausing to assess whether interest rates are high enough to get us back to the 2% target. That doesn't sound like a conversation about cutting, does it?
We'll go to our final question in the room from Bloomberg.
Esteban Duarte from Bloomberg. So the question is regarding the latest data in the Toronto housing market. Basically, there was a rebound in prices and sales. So wonder if you are worried that recovery in terms of prices and sales are partially related to the pace of hikes, and whether that situation will force you to keep the current level for a longer term.
Well, a couple comments there. The housing market is a really important part of the Canadian economy, but it's part of the Canadian economy. And when we look at the overall balance between demand and supply, we're looking at the whole economy. And then, of course, within the real estate market, there are many real estate markets. Toronto's a very big one, but we have a very big country with many real estate markets, and they're in different stages of adjustment. If you look broad brush, what you saw an unsustainable boom in residential real estate through the pandemic. As we raised rates rapidly, one of the first places that hit, it affected housing very quickly. Housing activity has weakened sharply. Our own forecast is that if you look at the country as a whole, it's probably still got some weakening to go. It's weak, it's declining, but at a declining pace. And as we get into the second half of the year, probably see housing market pick up. There are some underlying supports for the housing market, and they're particularly evident here in Toronto. We're seeing large inflows of newcomers into Canada. Frankly, that's an advantage for Canada. Canada's a place people want to come to. That's adding labor supply, but it's also adding housing demand. So there are some underlying supports, and we will be watching the contribution of housing. But I would say overall, the housing market has been evolving largely in line with our own projections. If you go back over the last year, we expected it to slow. It slowed considerably, probably got a little more to go. And at some point, the effect of those interest rate increases will wane. Those underlying supports will become more prevalent, and you'll start to see some recovery.
All right, we're going to turn to the phone lines now. For reporters who were late in joining the call, if you have a question, let us know by sending a quick email to communications@bankofcanada.ca and we'll put you in the queue. Pour les journalistes qui se sont joints à l'appel avec un peu de retard, envoyez un bref courriel à communication@banqueducanada.ca, communication avec un S, si vous souhaitez poser une question. And just a reminder for those on the call to unmute, please press *6, and to mute again, *6. Once you're done asking your question, we'll start with Najoud from Canadian Press.
Hi, Governor. I've been getting access to the latest CP report and discuss flash estimates for the quarter and for market decline.
Najoud, you're kind of cracking up. I don't know if you can find a place where you've got better reception, but I couldn't really catch the question.
Sorry, can you hear me better now?
Yes, that is better.
Okay, I'm just wondering if I can get your reaction to the latest GDP report and how the bank assessed the report.
I don't really have much to say on, one. I think you got to be careful looking at one number. You're going to see some numbers coming in a little stronger, some numbers coming in a little weaker. I think we've been very clear, Jude, that what we're really looking for is an accumulation of evidence, and I think one of the reasons we paused was we know that monetary policy works with what are called long and variable lags. We know that there's a delayed effect. We know there's more coming through. And, it's not one bit of data that's going to change our mind in either direction, but it's really an accumulation of data. So, and by putting out our forecast, everybody can look at that data relative to our forecast. And if you so I wouldn't focus too much on any one bit of data, but if you start to see consistently the economy coming in stronger than our forecast, that probably means the economy's staying in excess demand, and you're probably going to see inflation start to come in consistently above our forecast, and that would be a clear signal to us that it would be time to have that we may well need to raise rates further. On the other hand, if things are coming down, if things come down faster, well, that'll certainly be good news. Canadians have certainly got some relief from high inflation. We think there's certainly some more relief to come, and we really want to make sure we get all the way back to the 2% target. If that can happen more quickly, all the better.
We'll go next to Paul Vieira.
Yes, hi. Governor, the minutes talked about how officials spent considerable time discussing the implications of rapid population growth. That's all from immigration. You've hinted at some of that in your answer about housing, but are we at all reaching a point where the rapid intake of immigration is starting to have, could be thwarting or at least hurting efforts to get inflation to target?
Well, the way I would put it is that it's doing a few things, and it's really important that at the Bank of Canada we understand how it's affecting the economy. So I think at a very macro level, I'd highlight two things. The first thing is that with more, so the baby boomers are, they have been and are continuing to move into retirement. So their labor force participation is really declining, and they're the big bulge in the labor force. So our labor force growth is declining, and if nothing else was happening, that would mean that our potential growth in the economy would be declining. That decline is being considerably offset by higher immigration. And what that means is that for the country as a whole, the economy can grow faster without creating inflation because we've got new workers coming into the economy to replace those retiring baby boomers. If we didn't have that, the sort of sustainable growth rate, the potential growth rate of the economy would be lower than it is. So, that is adding to our growth potential to the economy. We can grow more without creating inflationary pressures. The second thing I would say, though, is that we're starting in an economy with excess demand. Our economy is overheated. And when you add, so when immigrants come into the country, they add new workers. That adds supply. But of course, these new Canadians, these new entrants into the economy, they need housing. They go shopping. They buy things too, so they're also adding to demand. So if you start an economy that's overheated and you add supply and you add demand, the economy's still overheated. And so the message there is, inflation's not going to go away by itself. Immigration is not going to solve our inflationary problem. Monetary policy still has work to do to get inflation down. But it does mean that the economy over time can grow faster without creating inflationary pressures.
We'll go next to Reuters.
Hi, Governor. It's Steve Scheer, Reuters. I wanted to ask a little bit, the Fed indicated yesterday that it may pause on its tightening campaign, and I was wondering if that made you feel more confident about the track you're on. You announced the pause in January. How are you feeling about that timing?
Well, look, obviously what the Fed does is and what happens in the U.S. economy is important for Canada. But I really worry about, I don't worry about their decisions, I worry about our decisions. Look, I think broad brush, we've all been through a very similar pandemic. Our economies all went over a cliff. They've all come roaring back. We're all dealing with a sharp increase in inflation, and certainly the Fed and the Bank of Canada both responded forcefully with rapid increases in interest rates. We stopped raising at 4.5. We've held it there for the last couple of meetings. They've gone up for the last two and indicated that they've changed the language in terms of their forward statement. We'll see what they do, but I have to say, I'm focused on what we're doing. I think regardless of what their next move is, I think we've all been through this rapid tightening cycle. We're certainly all getting closer to the end. As I said to the earlier question, we've paused. That doesn't mean we're necessarily at the end. It means we know there's lags, and we're using this pause as the opportunity to assess whether we've done done enough. And I think, looking at the language coming out of the Fed, it had a similar ring to it.
So we're almost at time, so we'll take one final question, and it will be from Greg Quinn.
Good afternoon. Canada has several big banks with substantial regional operations in the U.S., as we saw today with TD Bank. Isn't there a risk from that kind of exposure within our Canadian banks, and are you discussing this issue with the CEOs of those firms?
There certainly were, as I mentioned in a previous call, around the time that SVB failed and Signature failed. There were a number of conversations. I certainly had a number of conversations, as did the Minister of Finance, with our bank CEOs. We were also in contact with the CROs, the treasurers. That's sort of standard operating procedure when there is turbulence in the financial system. We want to make sure we're all working with the latest information. And certainly, in those conversations, they were not seeing any really unusual deposit flows. I will say that we have a strong banking system in this country, and there's a number of reasons for that: the structure, the risk management in our financial institutions, the strong supervision, and strong regulation. That's an advantage for Canada. It's something that's important we maintain. It's not something you want to be complacent about. And banks are well aware that they need to manage their risks against a changing background. Supervisors are being vigilant, and certainly speaking for the Bank of Canada, we stand ready to provide liquidity against good collateral to keep credit flowing if there was a severe liquidity stress situation. And I'll just add, actually, my colleague, Deputy Governor Tony Gravel, gave a speech about a month ago. In the last, through the global financial crisis and through the pandemic, we gained a lot of experience with providing emergency liquidity in highly stressed situations. And we've reflected on what worked well, what didn't work as well as we'd hoped. And in that speech of Tony's, he laid out what we'd learned, what the financial system could expect from us going forward. And I would say sort of the two highlights are we have introduced some more targeted facilities that could be used if needed. And we're also very conscious that we need to be very careful not to create moral hazard going forward.
All right, that concludes this press conference. Thank you so much for everyone who attended, and thank you, Governor, for taking the questions.